Welcome to the DSG podcast, exploring the intersection of on-chain and traditional finance. As a digital securities platform committed to open finance, we bring you insightful conversations with industry leaders and innovators, exploring the evolution of capital markets. Whether you're a finance professional trying to raise capital or curious about on-chain finance, tune in for grounded perspectives on where finance is headed. The content shared in this podcast is for informational purposes only and does not constitute financial, legal, or investment advice. DSG does not endorse any specific investment strategies or provide advice specific to any individual's circumstances. Listeners should consult their own investment advisors before making any decisions based on the information provided. Now let's get started.
Oh, great. Hi to my welcome, everyone. I'm Tim Maclean, host of this week's episode of the DSG podcast. It's a pleasure to be joined by Jeremy Muir. Jeremy is an experienced financial services lawyer and partner at MinterEllison. You're also chair of Blockchain NZ, and you've certainly been very supportive of DSG this first year, both encouraging and otherwise. And so, yeah, pleasure to be joined by Jeremy and to access some of your insights, presumably off the clock.
Wait, I just need to turn the timer off.
Okay.
No, it's great to be here. Happy to talk to you guys. Love your work.
Thank you. So perhaps maybe that reference to off the clock, maybe we could dive into how you got involved with cash-strapped startups and fintech and blockchain.
Yeah, cool. So you want the superhero origin story? Okay.
Yeah.
So I'm a partner at MinterEllisonRuddWatts, which is one of New Zealand's largest commercial law firms. We're also in association with MinterEllison in Australia, which is one of Australia's largest firms. This is the only law firm I've worked at in New Zealand. I joined as a clerk from university, went overseas for about 5 years, just under, worked offshore in sort of Guernsey and the Cayman Islands, setting up investment funds and financial services work. Came back, became a partner here, have really built a practice that sort of covers some of my twin passions of both funds and financial regulation and startups and venture capital. So I act for a lot of the venture capital funds in New Zealand in terms of setting up their sort of private funds. And through that, just got to sort of live and breathe that sort of startup space a bit. Then came to realize that my other sort of special set of skills around financial regulation was useful to fintechs. So businesses like Sharesies, other equity crowdfunding, peer-to-peer platforms, as they were sort of starting to grow in New Zealand. So I've worked with and helped a lot of those sort of businesses. And then that sort of transformed or evolved further in 2017 when we decided to sort of dip our toe in crypto waters. And from that, I've been actively involved in that sort of blockchain space here in New Zealand as well.
I guess you'll be pleased to know there's a disclaimer at the start. We're not sort of diving into legal advice per se. So, but at a high level, I
wouldn't trust anything I say anyway.
Yeah. Oh, you're recorded, so well, that does help you, doesn't it? So how would you describe the New Zealand's regulatory space compared to some of the offshore jurisdictions, particularly with regards to how permissive maybe the environment is for fintech or that side of things, blockchain?
Yeah,
blockchain,
look, every jurisdiction is both different and the same in that financial services regulation exists everywhere to protect consumers who might get involved in investment, and also to ensure that financial services businesses stay afloat and are run by reputable people, not criminals, and just generally look after this sector of the markets. In New Zealand, we're I would say, different from some of our neighbours. So we're different from Australia in some of the details of how our system works. Australia, for example, has this concept of an AFSL, an Australian Financial Services Licence, where kind of anything you do, you probably need an AFSL. In New Zealand, when it comes to licensing, we license certain specific activities when they are provided to generally retail, so mum and dad, open to anyone, customers in New Zealand. So we don't, for example, license a lot of activities that are provided only to qualifying or wholesale investors, and we don't license activities that are provided, or services or products that are provided to people outside New Zealand, because we don't see ourselves having much of a role in protecting people outside of New Zealand. And then there are some activities like custody of financial products, like holding shares or other products on behalf of other people that we don't license at all, whereas in other jurisdictions you would need a license. We have other things. We have registration, we have AML, we have holding client money rules, and all of those things which apply often across the board, even to retail and wholesale. But we don't license as many things as other jurisdictions, which is both a pro and a con, in that it makes it easier to do stuff, but you don't have the asset of a license, perhaps, to distinguish you from other providers. And then I guess just the other point in relation to offshore, and when I say offshore, I mean places like the Cayman Islands, British Virgin Islands, Guernsey, Jersey, Isle of Man, Hong Kong, even finance centres where you have a cluster of people and companies that exist to provide international services. Those places are really designed, where the regulation is in part designed to regulate businesses that are based there but are actually serving customers in other places. Our regulation isn't really designed that way at all. Our regulation is designed to protect customers in New Zealand, generally from people who are based here, but also to a degree from people who are based somewhere else. So that's one of the reasons why we're not the Switzerland of the South Pacific, as John Key sort of suggested that we might be at one point. So there are definite interesting features about our regime. Happy to talk about crypto specifically when we get to that.
Yeah, well, I got sort of two ways we can go, which is, do you find that there's uncertainty in New Zealand regulation? And I did want to also ask if that, particularly with regards to crypto, but also, why have we adopted a sort of retail protection style of financial service marketplace here in New Zealand? Why perhaps have we not chosen a more Guernsey-esque or Cayman Islands style of sort of opening to the world about, do you have any thoughts on the reasons why that might be? And
I do, surprisingly.
The one that okay, cool. All right, I'll be interested to hear those.
Look, I mean, we start by being in traditionally an onshore jurisdiction as opposed to an offshore one. So a jurisdiction that mainly looks after its own people, as most countries are. You actually have to really make a decision to kind of set up to be a hub or an offshore jurisdiction. Having said that, some countries are a mix of both. So in the United States, for example, they are mostly and strenuously concerned with looking after Americans and American citizens, to a degree, even those that are outside America. But then there are also some states like Delaware, which exist to perhaps operate more like a little offshore centre within a country. And in some other countries like Ireland, you have Dublin, which kind of operates as a bit of a mix of an onshore and offshore sort of place. But we're a bit like Australia in that we generally look after our own people, and that's the way that our rules were designed, mainly as consumer protection legislation. You did get, I mentioned before, John Key in the sort of Switzerland of the South Pacific speech that he made sort of relatively early on in his career. I mean, he understood offshore, coming from having been a currency trader, and saw that New Zealand actually does have a lot of the attributes that could mean we could be successful as an offshore centre, and that we are a well-regulated, politically stable, English-speaking country with a
Mm.
relatively, sensible tax system, although not a zero tax system. So all of those were pluses. On the minus side were things like time zones, not necessarily ideal for large parts of the world, but could be quite good for sort of Asia Pacific. But anyway, and we did take some steps at that point to pass some laws, tweak some tax regimes so that you could have New Zealand as, for example, a funds hub where you offshore international fund managers could domicile a fund in New Zealand and it wouldn't pay New Zealand tax on its non-New Zealand earnings for its non-New Zealand investors. As to why that didn't go further, I mean, a couple of reasons. The external sort of factor was the Panama Papers were published shortly thereafter. New Zealand was named and shamed to a degree for its involvement through the offshore trusts regime, where New Zealand kind of was already operating a bit like an offshore finance centre in that you could set up trusts here with non-resident settlors, putting in the assets that wouldn't pay New Zealand tax. So people were using New Zealand as a place to sort of park wealth and assets in New Zealand trusts. And Panama Papers were journalists publishing a lot of materials, particularly based around a Panamanian law firm. And New Zealand was just named in a number of embarrassing ways. And it became a bit of a political hot potato. Because what you actually need to do to run that offshore strategy is get out there and publicize and say, we are open to doing this kind of business. And we could do that, but I just don't think there has not been the political will to do that, because you do run the risk of ending up with egg on your face because you back someone who turns out to be a criminal or otherwise. I mean, just ask the Bahamas, who set themselves up as, they were going to be the next crypto hub, and they attracted their, keynote big client FTX to set up there and spend lots of money, and it was all going swimmingly until it turned out not a good horse to back.
Gosh, yeah, that is it's an interesting fork with a political fork there. Yeah, I wasn't. It takes me back to Panama Papers, which had forgotten about, but interesting history. And now, do you think where do you think we are currently in terms of? I know this government is very pro foreign direct investment and trying to attract capital from overseas with incentives like visas.
Yeah.
That might be. Sorry. Yep.
Yeah. So I mean, we could have another go at and I mean, any country would love to have businesses set up and pay taxes and employ people to export financial services, which is definitely, I mean, financial services is great export. It's very low weight. It doesn't cost a lot in sort of travel carbon miles. It requires a well-educated population like New Zealand has. Would perhaps entice people back from overseas to high-paid jobs in the finance sector. There's a great success story. And within Tech NZ and within the tech family, fintech has been New Zealand's fastest growing or thereabouts export sector for a number of years. So there's definitely hope that we'll continue to sort of evolve that way. But we are kind of always pushing up against the regulatory design, which is let's protect New Zealanders. It's not that it's actually, but what it means is, if we go back to saying you need a license for things with retail New Zealand customers, what it does mean is that it's actually generally not that hard to set up in New Zealand and serve international customers, but you just won't be able to claim that you're licensed or that you're somehow supervised by the Financial Markets Authority. And we have this thing called the FSPR, the Financial Service Providers Register, that all financial services businesses, generally with a place of business in New Zealand or serving New Zealand customers, need to be registered on. But that's not a license. And in fact, when it was first created, which was largely for AML reasons, so FATF, the Financial Action Task Force, came to New Zealand, did a bit of a survey and said, you guys are well behind the eight ball. You don't even have a list of all the people providing financial services in New Zealand. So that's what we did. We created a list. But a lot of people then tried to sort of promote themselves as being licensed in New Zealand or a licensed FSP, and then to claim that they were somehow regulated. So there's been a lot of pushback on that, and you can't do that now. You have to have disclaimers saying it doesn't mean you're supervised by the FMA, which not everyone knows. So ask your lawyer.
Yeah. No financial advice here. So with crypto specifically, do you ever get tied in knots, which it sometimes seems that other jurisdictions do with this kind of question of what is a security? Do you find that, or do you find our regulation a little more permissive, or perhaps agnostic to a tokenized vehicle?
Super interesting question. And, the answer is that in New Zealand, I think we're better off than in many other jurisdictions in that at least the answers to that question as to whether something is you use the term security, which we'll come back to, but let's say in New Zealand, we would say a regulated financial product. The answers are reasonably clear, and that's not always been the case here. But that is how our current legislation, the Financial Markets Conduct Act 2013, was designed to work. We have these 4 categories of financial product: shares, equity securities, debt, derivatives, managed investment schemes, managed investment products, that all have relatively tight definitions. So a good lawyer who's experienced in this space can generally look at a token or some kind of crypto product and give you a reasonably clean opinion, or should be able to if they know what they're doing, on whether it is a financial product or not. And that's not been the case in, say, the US, where the relevant term would be a security, and what they have is old legislation that's nearly 100 years old, and case law which judges have made around based on things like selling interests in orange groves. This is the Howey test, which you'll hear about if you dig in to that, as to whether something is a security, which talks about people participating and expecting a benefit due to the efforts of a third party. Really sort of quite vague tests like that, which actually can arguably catch a number of crypto-based assets. And what's happened in the US is you've then had a bit of a turf war between the SEC, the Securities and Exchange Commission, and the CFTC, sort of the other regulatory bodies. And the SEC's tried to sort of reach out and wrap its arms around the crypto space by saying that a lot of things are securities, where most people in the market didn't think they were, and a lot of lawyers from top law schools and top law firms had told their clients, no, applying how the laws generally understood, this shouldn't be a security. But the SEC has been sort of pushing that definition out by taking regulatory actions, forcing people to settle, and then saying, well, these guys settled, so we must be right. And I mean, the interesting thing will be to see how that changes under a new leadership at the SEC under Donald Trump. But going back to New Zealand,
we issued a meme coin, yeah. Wow.
But going back to New Zealand, the reason we have this clarity is that there were some decisions made at the time that the legislation was coming through, where it was thought, rather than having this sort of really broad definition so that we can, because we're worried that people might fall outside it, what we have is a call-in power. So we actually have this residual category, unhelpfully called a security, which is unhelpful because that's what everyone else in the world calls the thing they regulate, whereas we regulate the thing called a financial product. And a security is just anything that you might invest in or use to mitigate a financial risk or invest for a financial benefit. So, houses, stamps, schemes, and contractual based things could all be fit into that broad definition, but they won't be regulated. But if they fall into that definition, the Financial Markets Authority has an ability to call them in and designate them into a class of financial product going forwards, not retrospectively. So in New Zealand, most crypto assets, so Bitcoin, for example, clearly not, in my view, a financial product, and I think the FMA would share this, but probably a security. Don't say that to an American lawyer, because they'll go, wow, what a backward place you are. Even we recognize that Bitcoin's not a security. But the point is, in New Zealand, it's the fact that it's not a financial product, which is the equivalent of it being a security under US law. Anyway, that's getting down into the details, but it is fascinating. And partly a lot of this comes from, there was an investment scheme called Blue Chip that was promoted in these kind of earlier 2000s, and then went bust. A lot of retail mums and dads, grandmas and granddads, in fact, lost a whole lot of money around this property-based scheme that was kind of designed to fall outside the old securities definitions under the Securities Act. So that was sort of percolating in a lot of the drafters of the new legislation's mind as to how do we stop that. Well, let's have clearer definitions, but let's just if the FMA sees something out there it doesn't like, they can pick it up and just be clear that it's caught.
I'm not aware of a case where they've felt the need to do that yet. Is that true?
No, that's absolutely right. There is, as far as I'm aware, only one designation that the FMA has published, or there may be some other peripheral things, which is around companies which should be treated as funds, so nothing to do with crypto. And they certainly haven't used that power in the sort of digital asset space. And there's not really any reason that they should do so at this point. And if they did, the point is that if you, for example, pick up Bitcoin and decide to designate it into one of the financial product classes, it would have a lot of very strange consequences. Some parts of it would make sense. And I think if you look at some of the work I did for the Finance and Expenditure Select Committee with Alex Sims around how we might regulate crypto in New Zealand, there are certainly some things like as to whether financial advice should apply to people who try and advise on in buying and selling crypto assets. Yes, and if you class them as financial products, that might work, and it might allow those rules to apply. But other things like markets requiring NZX style licenses, any offer requiring a product disclosure statement, which is clearly not designed for these sort of crypto assets, would all get quite messy quite quickly. So the FMA's definitely taken a bit of a wait and see approach, which hasn't really blown up in their face so far. So I think they're reasonably content.
Well, there's definitely the VASP stuff, which is quite stringent guidelines around mandatory requirements around anti-money laundering for so it really sort of ups the standard if you're issuing tokens and taking cash. So there's that stuff which is obviously well controlled. So it sort of stops, I think.
Yeah,
maybe, the first instance cowboys and things from just deciding that would be sorry.
Yeah, and these things aren't unregulated, even if they're not caught by these specific regimes, in the sense that so AML, as you say, AML is probably the one area where New Zealand laws are as strict or stricter than many other countries, just because we came slightly late to the party. We had political mandates to sort of be right at the top. To don't go light on this. Let's set the rules to prevent money laundering at a high level. And so that definitely applies to any sort of service providers in both that crypto space or e-wallets or any other form of financial activity. Probably has to trigger those rules. And then other things like just what we call general fair dealing rules. So if you're providing a financial service, and if let's say you were an easy crypto style business where you were providing the service of allowing people to give you fiat money and you would buy crypto for them, or if you were operating a crypto exchange or something in New Zealand, a lot of the licensing rules and things wouldn't apply if you didn't list coins or allow yourself to buy coins or tokens that weren't financial products. But AML would still apply because you would be seen as providing a financial service, probably a money or value transfer service, to use the jargon. And then that would trigger both AML, but by providing a financial service, the FMA then has some oversight under the fair dealing rules in Part 2 of the Financial Markets Conduct Act, FMCA, which say that you can't be misleading or deceptive or make unsubstantiated representations in the way that you offer your service. So that's kind of their, if they don't like what you're doing, it's not really hard for them to say that you're misleading people somehow, because you're misleading them as to the nature of your product or its features or the risks around it potentially.
What would you say, are there areas where we can improve? What have you got any sort of, is slightly critical of the way our regime operates in comparison to others? One might be for it is that VAS stuff is quite tough. As someone who's in the face of it.
It is.
Yeah.
And I mean, AML is AML CFT, anti-money laundering, countering and financing of terrorism rules, are a thing that it's hard to argue against because money laundering and financing terrorism is bad. I think we can all agree at that starting point. But there is this massive and overlapping level of compliance that's required for people to do the same things over and over again in terms of having their identity verified, reporting transactions, and certainly, as you say, the virtual asset VAS service provider rules are quite tough on things like requiring reports on transactions, classing any sort of crypto transfer as a wire transfer, requiring reporting and various rules like that. So yeah, that is tough. It also just the lack of clarity perhaps around, or probably the fact that it does apply if you're issuing a new set of tokens, does also mean a lot of people historically and probably still currently are driven to sort of set up and issue their tokens in another jurisdiction, whether it's Hong Kong, Singapore, BVI, Panama, any of those sort of places. So AML, yes, with my industry hat on and trying to encourage people to use this technology to innovate and do things, it would be nice if those AML laws were wound back or changed or made more usable for people. Otherwise, it's not that people don't do stuff, it's just that they do it somewhere else where there is less scrutiny anyway. On the other hand, with AML, ultimately, my one hope is that will just sort of become easier over the next 5-10 years, particularly as we get digital identity sorted out, and if you don't have to provide stamped documents and copies of your passport and things whenever you want to do anything, but someone can just ping your sovereign digital identity source, then that may get easier rather than harder.
Oh, so AML maybe obviously not a return to that sort of grey status of our past, but somewhere like something moderate,
hard to see,
moderate.
Pleasant though that would be for some businesses, hard to see that happening. But we do have the capacity to moderate it, to provide for exemptions on a risk basis. So yeah, there's continuous work being done, and encourage people to submit to processes and things where the government and the regulators are looking at it. And as we move towards having so what we currently have are 3 different supervisors for the AML regime: FMA, RBNZ, and DIA, Department of Internal Affairs. That's all going to be collapsed into one, DIA, eventually. And that's probably a good thing, at least in that it'll be hopefully a place where there is a single source of expertise. They can perhaps find it easier to publish guidance and exemptions and things that affect the industry. So, but who knows? We'll watch and see. But there are certainly other areas to work on in the digital asset space as well.
So not to unfairly summarised, but you feel New Zealand's got opportunities with a permissive regime, maybe, but some areas that could tweak for improvement. But it's otherwise a good framework for starting businesses in fintech and blockchain.
Yeah,
Is that a fair assessment? Yeah.
absolutely. And there are a couple of reasons for that. One is that the slightly permissive aspect of it can help you get a minimum viable product sort of set up, rather than having the sort of the threshold issue of a year's work and hundreds of thousands of dollars to get a license or something like that. That's all helpful. On the other hand, there's definitely thinking going on around, just to follow the way the rest of the world is going, around sort of introducing some licensing regimes for certain activities within that crypto space. And that's coming largely at the behest of the industry, who want to be able to show that they are well regulated and they have some supervision over them, because otherwise, ultimately, as this all becomes more mainstream, you may see a flight to quality of people wanting to deal with licensed and regulated businesses in jurisdictions that actually are looking over their shoulders to a degree. But you do have to balance that without creating massive regimes around types of business that are very small here, which is why in our report to the Finance and Expenditure Select Committee that Alex Sims and I did, at that point, which was 3 or 4 years ago now, we didn't advocate for a licensing regime for exchanges. World's moved on a bit since then. We probably would say, yeah, everyone else seems to be going that way, so maybe we should do that now. And there are good reasons that you would do that. Part of the reservation we had, though, is there are just so few of that kind of business in New Zealand that would actually be caught. And it's very expensive to design a whole regime for 1 or 2 businesses. On the other hand, if you design a regime that becomes popular, you might get an influx of businesses wanting to take advantage of it. So it's definitely a balancing exercise for some of these issues.
Cool. Thank you. That's sort of a good where we're at for the regulatory environment. One of the things I wanted to discuss is the RBNZ proposal for digital cash. Why specifically I wanted to get your thoughts on it was to test sort of where we're thinking, which is yes, it's a good innovation to allow digital cash, but how we do that is the problem. But also, if you want the full experience of an on-chain settlement, it originated in sort of digital cash and the onboarding side of things, and it has to be off-boarded in digital cash. It has to be a sort of end-to-end experience, and with something like DSG as an exchange in the middle. But yeah, it's how you make the sausage, I guess. And I wondered what your thoughts were, and really, how did you see that proposal by RBNZ, and what are your views on that?
Yeah, I guess in the interest of disclosure, I'm on an advisory group, which has a number of people across both industry and other sectors, such as charities and various public groups, who are called on to sort of give a bit of advice to the RBNZ or views around how their proposal is developing. And the interesting thing is that the New Zealand proposal is developing in a similar way to some countries, but different from others. So in Australia, for example, there's been a lot more focus on what you would call a wholesale CBDC, central bank digital currency, where using the technology of perhaps blockchain or some form of digital government money to just work behind the scenes between banks and institutions to sort of make some of those processes be a little smoother and have the benefit of smart contracts and ledgers, digital ledgers and things. In New Zealand, we're looking very much at something which may be available to anyone as a form of government-issued digital money. obviously we already have lots of forms of digital money anyway, but generally they're not a direct holding of money issued by the government in the way cash is, for example. So if you have money in a bank, it's not actually your money. What you actually have is a right in debt. You've lent money to the bank, they've borrowed it from you, and they're entitled to give it back to you either on call or at the end of a term deposit. So it's its own thing. It's not quite the same as having dollar notes issued by the government. But if you could have a digital form of that in a wallet that you control, then that's a really interesting proposition. And I think it's definitely something that we want to experiment with, and that we want, I'm keen that we get some MVPs out there, do some trials, because the risk of not doing it is kind of that money in our increasingly digital future will be controlled either by big tech companies, sort of continuing to drive us to exist in their walled gardens where actually you don't own anything. All you have is kind of by license or right from Apple or Meta or whoever. And in fact, even the money that they have the money is controlled by them, because it's a sort of an in-garden coin issued, which they could take away from you, or that they can monitor however they like. The law will probably say they need to tell you that they're tracking all of your expenditure, but no one reads the terms and conditions or cares anyway. So there are reasons why we either don't want that to happen at all, or at least to provide for alternatives to sort of keep them honest. And then on the other point is that a lot of things that we take for granted around the way economics works is to do with monetary policy, which is driven by government issued currency. So the ability of the government, the RBNZ as an independent entity to enact monetary policy by setting the OCR would become kind of useless if no one was using government money anyway, and if banks didn't need to hold it there in terms of how they set their interest rates. So it's a slightly if you can't beat them, join them approach, I think. And I'm encouraged that the RBNZ is looking at it, and I'm keen that they actually sort of evolve into trialing a few things. And as you say as well, if that can then work on an on-chain basis, then all of the enhancements and efficiencies of being on-chain depend on not having to keep going on and off, because that's where the latency and the delays and the inefficiency is. So if we can keep things that work sort of interoperably and seamlessly and quickly, then that's the ideal future, where things just happen at the speed of thought.
Yeah, no, we have so what's called, the vision is atomic settlement. That's the goal at the end, which means that it's just instantaneous settlement of transactions, which you think about some products, and perhaps this isn't as common anymore, but it's like T+2 or 3, so it could be 3 days to settle or something, which is ridiculous, so. But our view is that I think that the wholesale model works because that private sector, which is done with the banks anyway, and like you say, we do have digital money. It's just not sort of blockchain, I suppose. But if you have a sort of source of collateral that the private sector can say, all right, well, we've got proof of treasury funds or something, and we can create a digital coin using this blockchain or that blockchain, and let the market decide which works the best. And then people start using that. I don't think it dampens the Reserve Bank's tools per se, because they can still control the source of the funds. But you'd have to regulate the players that are. Yeah. But I do remember, funnily enough, one of the one of the sort of the big driver for CBDCs was, which seems an absurd sort of like we've passed this point now, but it was the trying to get negative interest rates, out there. It was like, how do we go zero if somebody holds cash? How do we start taking money off them? And then the other funny thing I saw in the news the other day, which is kind of again, it's just digital cash. It doesn't have to be blockchain, but I think in the States it says it costs 3.5 pennies to make 1 penny.
Yeah.
So they're canning it like
There's
stuff
a reason
like
we
that.
don't have 1 cent coins, 2 cent coins, or I think even 5 cent coins anymore, do we? So it's been so long since I handled cash. Yeah.
Cool. All right. Well, I think
As someone I dearly love said to me last night, it looks like Donald Trump's no longer making sense.
Yeah, it's a good one. Cool. Yeah, I also implore like the Reserve Bank to have a look at it, and it's just how it does it. I think I'm sort of the view that we have market-based solutions, and the Reserve Bank stick to that sort of wholesale focus, in my view. But see how it shakes out.
It's a great point, and the RBNZ, what they have signalled is that even though they are calling it retail and it is a fundamentally retail, they still see themselves not dealing with the public in a way, and that they have talked about the need for, they won't be providing direct wallet services, so you will still need a fintech or some other wallet solution or something to hold your e-dollars.
Yeah, and that just needs to go one step back, I think. Yeah, and then that's just my view.
Yeah.
Cool. So
lots of other issues around privacy and things as well, which rest assured the RBNZ is well aware of, and it comes down to your kind of level of trust in government as to whether you think they'll get it right. Either trust in their intentions or their capabilities as to whether it is designed in such a way that it works like cash, or whether it is a programmable money that the government will say you can only spend on this or that or the other thing, and we'll track it as it moves around. I mean, there are so many reasons why they might want to do that, but certainly they're aware that will be off-putting and threatening to a number of people and possibly the whole project. So the stated intention at this stage is it will be like cash.
Yeah. It also could, I suppose, lean into that whole John Key Switzerland thing as well, if you went the other way and enabled a very open system of not monitored sort of, interesting. Certainly watch this space. Cool. So the next sort of questions, and I know we're kind of, I don't know how much of your time off the clock is allowed here, but
we'll go until we fall down.
Okay.
No,
I could.
We can go to the hour. How's that?
Cool. That sounds perfect. So
people will be getting bored by now.
Yeah. Geez, everyone, is people still listening? If they are, well done.
If you are, you have won a car. Check under your chair.
Yeah. Cool. So finally, sort of what are the opportunities? I think we talked about maybe right-sizing the financial market, the financial markets regulation. Is there any other sort of areas you think? I know you're not sort of tax or accounting experts, but have you sort of had talks with other sort of experts in the area about what New Zealand can do to push forward this space, apart from perhaps just being open in regulation, and what are there incentives?
Well, I mean, on the tax side, I'm not the tax guy, but we've got a very busy, active tax team here who I work with on crypto stuff, and they are deeply engaged with the IRD and lawmakers around tax treatment of crypto transactions, DeFi, staking, other things. They've helped people who want to get a better result than paying tax on every aspect of a sale. So, or at least just helping people understand how they can deal with that. So that's a work in progress, and they're working with the authorities to try and get a good outcome, and one that encourages people to come to New Zealand, or people to want to stay and live in New Zealand as opposed to elsewhere. So definitely that's a work in progress. Look, there's lots of other things that we're excited about, and people that are doing interesting things in New Zealand. I think it's not a coincidence in some ways that probably our two biggest crypto or crypto adjacent businesses are in the sort of creative sector or creative adjacent, with companies like Futureverse and Vivi. I think really taking advantage of what we do well in New Zealand, and then just putting a sort of a technology enabling wrap around it, which I think is great. I've seen some really interesting things coming through with businesses like Toha around social impact and environmental protections enhanced by tokenomics and those sort of things. So I'm really interested to see how that evolves. And then, the stuff that you guys are doing, and tokenization of real world assets. So fractional ownership of property, all of those sort of things a lot of people are thinking about, and it kind of just makes sense because atomic settlement, all of those sort of things, the ability to make micropayments, macro payments, it's all designed to help that stuff work. And I think our regime in New Zealand is tolerant, particularly around the regulation. So look forward to seeing more of that. Also interested as we sort of evolve through that path to perhaps licensing, and also heavy licensing overseas. So if you're a business that's in Europe and the MICA regime is saying you need a heavy duty license to provide services, maybe come to New Zealand. We can set you up in a well-run jurisdiction with sensible laws and regulation, but it will be lighter, for at least for now, for a period. And probably because we're actually close to the regulators and close to the politicians, we can design regimes which hopefully work well for people, rather than sort of being overly kind of hidebound. And our fintech sandbox that we've just managed to get launched through the Financial Markets Authority, which was one of the recommendations in the report that Alex and I did for crypto, really is a very Kiwi number 8 wire mentality, bespoke operation, in that it's not just here's a heavily engineered set of principles to get into the sandbox, and yes, it means that this rule won't apply or that rule won't apply. No, it's more of a sort of if you get in, you're in a relationship with the regulator where there's a bit of mutuality, and hopefully you can get the benefit of some exemptions and things that help you sort of start your business or your particular project in a less difficult way.
Yeah, and I think that our experience is that having in that kind of open relationship with the regulator works well. Like it's just they've always been ready to engage, which I think is refreshing. I don't think you'd find that as much overseas.
It's harder from what I hear in other places. But I will put in a plug for the lawyers here, in that if you've got a great idea, if you ring up the FMA, you'll probably get a meeting and you'll probably talk to them. But you will get a better result, in my experience, if you've actually spent some time and going to them with a sort of a legal strategy. So particularly in these sort of disruptive, innovative areas, you really want to go to them and say, I've been to a lawyer, we think the answer is X. Tell us if you disagree, rather than, hey, this is what we're going to do, FMA. How does the regulation work? Because the first thing they will say is go and speak to a lawyer. And then the second thing they will say is probably the most conservative version of how the rules might apply to you. So if you want to actually optimize
No,
your regulatory position, it probably helps to do a bit of work in advance.
absolutely. And I guess on that note, is there any other advice, and how do people sort of get familiar with this space and your work?
Oh, yes.
Where do they find you? Yeah, where's the Jeremy Muir plug?
So the personal plug is, you can find me on by Googling Jeremy Muir Minters or crypto or anything. There's information on the Minters website. You can track me through there. Connect on LinkedIn. That's probably where I push out material. And with my hat on as current chair of Blockchain NZ, Blockchain NZ is the industry body for crypto blockchain in New Zealand. We're part of the Tech NZ umbrella organisation. We're getting more active again after a sort of quieter period last year where we didn't have an executive director. Well, we've got a great director, Trevor Topher, on board now. He's very, energetic, organising events and things. Reach out to them, please join, because that then gives us a little bit of cash to actually run events and send Trevor to events overseas and things to sort of sell the New Zealand story. But more, if you want to learn more, it's an opportunity to get invited to stuff, see the wiki, read the materials. But reach out if you have questions or just want to be connected to the right people. I'm always happy to sort of pass people to the right person to have a conversation.
I think that's solid
as I'm
advice.
Sure as DSG, and read the your magazine if you want to do your reverse plug. Thank you.
Yeah, no, that's a good one. We might have to get you to write for some, at some stage. And anything so if we're going away from any particular projects, obviously not financial advice, but nothing, any interesting area. I know you sort of mentioned a few cool New Zealand based ones. Is there any what's your thinking in terms of crypto space generally? Got any views there?
Yeah, nothing that I would want you to put money on. And I mean, the irony is that based on our earlier conversation, actually the financial advice laws don't apply to most of the things I could say. But do your own research, I believe is the phrase.
That's a good way to end, actually, because the one thing
but even better than that, don't just do your own research and just read lots of weird stuff on the internet. Talk to people is I think also very valuable. Yeah,
no, that's a good point. And what I would say is, I also think it's just a terrible idea to follow someone anyway, but because you can't hold the position and you go crazy. You don't know why
and
you buy the thing.
The exciting thing about this space, which where it alternates from blowing my mind and making me sort of sigh heavily, 2 or 3 times every 5 minutes in this area. So many people doing great stuff, great ideas, making things happen, and then people just trying to make money and through scams or capitalizing on bubbles in a way that's really unhelpful to the builders who are doing the cool stuff. But keep your eyes open.
Cool.
Be
awesome.
Safe out there.
On that note, thanks very much again, Jeremy. And
thanks, Tim. It's been a pleasure.
Chat soon.
Always good to support you guys and keep up the good work.